Imagine one day you wake up with the phone and then you see that PDD stock skyrockets just like it did a few days ago. And then a few days later you open the phone again and it just dropped and crashed. This is the reality of the wild west of Chinese stocks listed in the US. But is this time PDD stock going to be something huge? Or we are being trapped this time again? I'm going to analyze it today. PDD's share price is winning, but for how long? Let's break down the reasons behind of this massive rally. As we all know, PDD is the mother company of Temu. Temu is absolutely crashing it in the e-commerce market in the US. With aggressive pricing, deep discount, and a marketplace model, it is giving Amazon a huge headache. US users love out-ship deals. This pushes Temu's monthly active users in the US to 186 million, which is crazy. Oh, by the way, I've forgotten to introduce myself. If this is the first time you're here, my name is Eric. I've been investing since I was 18 years old for more than 20 years. I know, a bit younger, right? Anyway, I invest in stocks, ETFs, mutual funds, warrants, options, futures, even watches, you name it. In this channel, I want to give you unique perspective about money-making opportunities with Chinese stocks listed in the US. So remember, subscribe so that you're not going to miss out. The second reason why PDD went up a lot in the past few days is because Trump pauses the de minimis crackdown, which boosts Temu's a lot. The so-called de minimis crackdown means the US government plans to close a trade loophole which allows small merchandisers below $800 to enter the US, for example, through parcels without paying any tax. And this is what being exploited by many Chinese trade companies like Temu. This crackdown would have been disastrous for Temu, which is highly reliant on this loophole. But somehow Trump decided to press the pause button on this crackdown until further notice. That's why PD stocks soared a lot in the past few days. The third reason why PD stock price went up a lot is because it's growing much faster than its main competitor like Alibaba and JD.com. If you look at Q3 2024, the growth of PDD was 44%, comparing with around 5% in Alibaba and 5% in JD.com. Of course, PDD's overall revenue is still less than half of Alibaba and less than half of that of JD.com, but it is obviously growing much faster. PDD is winning, but for how long? There are major risks that can send the stock price of PDD crashing. Now, before you YOLO into PDD shares, well, let's look at the dangers ahead, because trust me, it's not going to be a smooth sailing. The first risk is the US regulatory and political environment. Imagine that the de minimis loophole crackdown is just being paused. It could start anytime soon from the US government against Chinese e-commerce company in the US. The second part, of course, is also about the political tension between China and the US. So the risk of being delisted in the US is still quite real. The second reason is fierce competition. Imagine Amazon and Shein both fighting back. Shein itself are ramping up their operations in the US and they already dominated fast fashion. Amazon is slashing its prices to compete. Bad news for Temu. Imagine if Temu loses its pricing edge, would consumers in the US still sticking around? Probably not. Last but not least, the reason is that even China, the main market for PDD, is slowing down. So the growth of PDD cannot be as fast as before because of the slowing down of the Chinese economy. Secondly, the e-commerce markets in China also being more mature. No more hyper-growth stories. That's why the growth is going down. So PDD is winning, but for how long? This kind of risks could potentially derail the stock price rally. But does it mean that we should avoid it altogether? Or this is a chance for us to make a huge amount of money? Let's see. Alright, so should you buy, hold, or sell PDD stocks? At least that's my own opinion. This is not financial advice, of course. Buy it if you think that Temu is going to dominate the e-commerce market in the US for the long term. Secondly, if you think that there won't be further crackdown on Chinese e-commerce company in the US. Third, if you like strong, profitable growth and you don't mind a lot of volatility short term, then this is the one. Hold it if you already own PDD and you're still waiting to clarify the trade war between China and the US with a clear signal of direction, then you might need to hold it. Sell it if you think that actually the de minimis crackdown would happen anytime soon and the Temu business model would no longer work in the US. Also, if you believe that in the longer term the profitability would not continue and you think that the competition is too fierce which Temu cannot handle, then you should sell it. PDD is winning, but for how long? For me personally, I believe that this is still a strong growth, profitable stock that is going to go up. However, there will be a lot of volatility in the short term. So it really depends on someone's risk appetite and the patience to wait for it to bear fruit. So what do you think? Do you think Temu and PDD itself would continue to dominate the US market and the Chinese market in e-commerce? Leave me in the comments below. If you disagree, let me know also in the comments below what you think about it and what kind of factors you would consider. Remember to subscribe so that we can continue making better videos for you guys. See you next time.